Good evening. This is Jeff Scott. This is June 29th, 2014, and this is my weekend review. Sorry I missed you all last week, but I was in the midst of my HGSI Doc Summer Summit down here in beautiful Palm Beach County, Florida. Couldn't resist taking this picture today. We're out on our boat this morning, and what a great title, Stocks and Blondes. Gotta love it. So the title of today is not Stocks and Blondes. It's Summertime Blues or Rally, as we're kind of getting to a point where there's a lot of naysayers out there, yet despite the naysayers, the market keeps going up. Although this was kind of a nothing week, as we'll talk about. Disclaimer, this is for educational purposes only. Any and all recommendations are in the spirit of education and should not be considered investment advice. I'm a doctor, not a broker, and I am fully independent. I have paid at some point for all the tools that I demonstrate, and therefore I have the ability to talk about what I believe in and what I want to use and not what I have to use. One thing I'm a strong believer on is knowledge and education, and this is sort of the roster of some of my favorites. It's not totally inclusive. There are others, but I point out Ian Woodward and Ron Brown of Woodward and Brown Investing, sort of the investing brains behind the HGSI philosophy. William O'Neill, the godfather of CanSlim, Morales and Catcher that take CanSlim to a different level. My buddy George Lee, sitting at his Mac with his Canadian hat. Alexander Elder, Jesse Stein, and Mark Minervini, which are great examples of how to use the education and the knowledge. Van Tharp, Money Management, and someone relatively new to my list, John Person, who I'll mention later, who was one of the guests at my meeting, guest speakers, did a great job. A little bit about the meeting. There are 6 pre-summit webinars which I posted. 5 of them are HGSI specific. The 6th is about TradeStation and incorporation of some of my indicators. I sent out an email to the HGSI board that they were posted with links. These are some of the folks that stuck around on Tuesday after the meeting. We took a boat out, went to Guanajuana's, one of my favorite restaurants. Here I am with my Michigan shirt, some of my new friends, some not so new friends. Here's proof that I fed everybody and that they all gained weight. In fact, one of them said he gained 10 pounds. And here was the meeting itself, so we didn't all have fun in the sun. Special guest speakers were John Person, who I'll talk about in the next slide, or soon to come. Jesus Nava from TradeStation did a great job introducing us to the power of their new options platform, as well as teaching us, including me, who uses the program religiously, some conditional ordering, OCOs and OSOs, and some shortcuts. George, the proprietor of HGSI, was there to speak about sort of his plan going forward of development, and Chris White introduced my new template for finding pullbacks, which remains, like many of the others, a work in progress, and we'll continue to improve it as well. Topics, mostly it was all about HGSI. The intent of the pre-summit meetings was to take everybody from being a newbie to being advanced user, and then we spent the meeting not what the buttons were and what the keystrokes were, but really understanding the words and wisdom of Ian, the tools and principles of HGSI, my process, my approach to money management, and then choosing a term that I learned from Alexander Elder, finding your A trade, or really what is your trade that you look for, and can you use HGSI, customizing views, etc., to help you find it. A little bit about John Person. John is an interesting guy. He's about my age. Actually, he's 2 years younger, so I'll give him that credit. When I was in med school, he was trading. He was working on the options exchange floor in various jobs that you do when you're right out of school, until ultimately he even owned and ran his own brokerage firm. He is a trader. He's also a world-class educator, and he's introduced us to certain new things such as person pivots, PPS buy-sell signals, which are within trade in Thinkorswim, something different, which is the low close and high close doji, last conditional change. And then he also has an innovative approach to volume, using on-balance volume, which I've now incorporated in my charts. And he also is a big seasonality fan, looking sort of macro at sectors on down. I highly, highly recommend Mastering the Stock Market, High Probability Market Timing and Stock Selection Tools. That is an outstanding book. The book before that, which is sort of black and yellow, is also an excellent book. That book, for better or worse, spends a lot of time on futures and Forex, or mostly futures rather. And so not everybody on my videos will probably find it as easy to read as the green one. The green one's an outstanding book. They're both outstanding books. And I've actually gone back and I've actually started reading the previous book as well, because I found that there's still a lot for me to learn from there as well. And just looking up the name of that book, it's black and yellow, and it's by John Person. Let's see if I can find it here on my Kindle somewhere before too long. Oh, let's see if I have it here. It's here. I'm just going to see if I can find it. I don't want to delay things just to find the title of the book, but John Person is the author, and it's called The Candlesticks and Pivot Point Trading Triggers. Candlestick and Pivot Point Trading Triggers. It's black and yellow on the front, so highly recommend those as well. John also has some extensive educational opportunities, some for free, some fee-based, at www.personsplanet.com. And I thank John again for being our guest speaker and really going over the top and speaking not for an hour and introducing some of the things that he does, but he spoke for 3.5 hours, which not only gave me a chance to catch my breath, but I think the audience really appreciated it. Now, in a few minutes, you'll probably end up seeing the desktop. Now, the funny thing is, this is a desktop on my backup to my backup computer, which I got because it has a screen that I can use for native for taping. It's 1920 by 1080 or whatever it is. What I really need is TradeStation, Thinkorswim. I need my HGSI for analyzing the market. EdgeRater, increasingly important. I'm a big seasonal fan using Magenta, and then MarketSmith for additional fundamentals and earnings beyond what I get in HGSI. As usual, I like to look at this picture. I mean, we have been living in stage 3 for months now, and every time it looks like we're rolling over, we get another leg up. So, you know, last week was a bit of a pause, although there was some pretty big volatility to the downside Tuesday and to the upside Wednesday. We'll take a look at that. But I think we're still sitting here where, you know, there's a lot of reasons that we can list: Ukraine, Syria, Iraq, the summer, the duration of the rally, the discussion by some of the Fed heads that suggest raising rates may come earlier. But, you know, bull markets like to climb a wall of worry. And as John said multiple times, bull markets don't end with a one-day reversal typically. It's a longer bottoming process or topping process, unlike bottoms that can end violently and quickly. So we probably have not topped, but I do expect to see increasing violence at the top, meaning big up days, big down days. Now, we might have some clues. The Canaries, which was a great index on the left-hand side of the chart with a massive move up in the end of 13 and into the beginning of 14, they really died in late February, early March. And they died again in late March. And they're treading water here. They're clearly sideways after they made a move up above the 50. I guess they're allowing time for some of the underlying stocks here to heal. But at best, they're treading water, and they're way below the 200-day moving average. As I look over here, Google, Facebook, and Netflix have really broken out nicely. LinkedIn kind of looks like the Canaries, to be honest, going sideways, threatening that it wants to go up. One that Gil Morales called on his website, on his chat room, Twitter, has also had a nice move, but it wasn't part of the Canaries. Now, this is a better representation, I believe, of what the market's doing. And these are the LLURs that we chose at the PV meeting in March. And I'll say this again, but let me say it now. If you've not recently been to a PV meeting, If you've never been to a PV meeting, Ron and Ian are outstanding, and they're going to continue to do them for a while, I hope, as long as there's interest. And the next one's in October. I was on a call with them this weekend. It'd be nice to see more people, give them some notice that they're coming, because they really offer a lot of education. I know a lot of folks were pleased with what I did in Singer Island, but all I can say is I'm a great front man. Where do you think I learned this stuff from? And they're just great guys. The LLURs were leaders that we picked in March, and you could see they had gotten pretty extended when we picked them at the end of March. And they came back to the 50, and all leaders will come to free parking. And it's interesting how this index has bounced off free parking several times, free parking being the 50-day moving average. And you could see our LLURs, not only have they held up, but they're pretty much at all-time highs. Market themes, as I mentioned, turnaround Tuesday and Wednesday this week. Mixed performances around break-even, meaning most of the indexes were close to break-even. Some were up, some were down. Small stocks starting to lead, which is, maybe this is the last phase of this giant rally that we've been in, but those that have been watching me, listening to me, and also trading know that small stocks were weak a couple months back and big stocks were leading. As I went through my top 500 charts today, perhaps I shouldn't be surprised that once again I saw a lot of interest rate sensitive stocks, REITs, utilities, MLPs. What did surprise me were the home builders. Several builders made it in my top 500 charts. Some of the components like U.S. Gypsum, Terex on cement, Sherwin-Williams and PPL on paint. And energy remains strong, but boy, is it getting expensive. I already mentioned the PV meeting. I believe that's the weekend. I am tentatively planning a meeting, and tentative means nothing certain yet, in Vegas on either the 16th or the 23rd of November. Either way will be done no later than Tuesday on the second part before Thanksgiving, which is why we'll probably do it the first weekend, which would be right before the Traders Expo. Still a lot of things have to happen for that to be finalized. George and I are committed, but it's a little bit tough for me to plan a meeting where I don't live. And I am going to do a second HGSI Doc Summit in February on Singer Island, as long as I can get halfway affordable hotel rates. I think the people that came here agreed with me that this was just a phenomenal property, and those that were lucky enough to bring their significant others, I'm sure had a lot of thank yous on the way back home. The week ahead, as always, it's the first Friday of the month, so that means we're going to have all kinds of issues around employment. You can see on June 3rd, non-farm private payrolls, non-farm payrolls, unemployment rates, claims, continuing claims. So this is going to be a busy, busy Friday from a data perspective. You'll get the Challenger employment and job cuts on the 2nd, which is, actually the 3rd is early this week. Monday, Tuesday. So the 3rd is Wednesday because Friday is the 4th. So it comes out on Thursday this week. That's important to know. Construction spending, pending home sales early in the week could affect home builders. As we look at those stocks reporting earnings this week, STZ, Constellation Brands, that's one I've talked about a lot, Wednesday, Greenbrier. Other than that, nothing here that's probably that major. It's important for you to know when your stock's earnings are. And now let's go take a look at the market and the charts. All right, so as always, I like to jump into TradeStation. Well, actually, let's look at my end of the week spreadsheet first. I archive a lot of things, and this is a way that I can understand the market. Now, most of you know that I typically do my market review, and I look at the various groups over 1 week. Problem is, I didn't do it last week because I was so busy with my meeting, so I didn't have all my groups this week. So I thought I would just look at the market to get a sense of what the market is doing. And as I said, pretty much everything was right around, at least of the major indexes, break even. In red, you can see the S&P 500, the big stocks in the Russell 1000, the NYSE, and the Dow were to the downside, nothing down 1%. And leading to the upside, the NASDAQ 100, interesting, was up 1%. Utilities were up 0.9, the NASDAQ 0.6, and the Russell's 2,000 small stocks and mid caps right around break even. So not a lot happened on the indexes. If, however, one looks at 2 weeks, and I thought this was important to compare it to, because over 1 week, you've got 8 winners, 7 losers. But this was sort of a week of just as treading water, because if you look over 2 weeks, massive moves. Russell up 2% plus, NASDAQ's up 2, small caps up 2. So if you step back and you look at a little bit bigger scope, one can see that over a 2-week period of time, you've had a big drop in the VIX, of which it was up a little bit this week of 3.78, but took a hit on Friday. And on the big movers being the utilities and the small stocks. Hindenburgs, there are none since this year and continue to be none. Now, you need to have 2% new lows and above 2% new highs. There's no new lows. So you're not going to start to get any concern about a Hindenburg until such point that we start to see some new lows. Bucketology, as you can see here, 68% above the midline on the Bollinger Bands. That's bullish. As we look here, we've come off the part where you had 10%, 15% above the upper band. So if anything, I'd say the market gave up a little bit of its exuberance this week, which is important. You need to pause to refresh every once in a while. If I look at the markets themselves, we've come off this more green and stronger appearance and have the risk here of getting back into chop. We did have some kahunas to the downside on Tuesday, but then the rest of the week, Wednesday was a great day for the longs, and Thursday and Friday just started feeling a lot like chop. So we may be getting into some of this summertime chop, and it wouldn't surprise me to see increasing volatility. Now, one of the things I like to talk about are boxes off the bottom. Now, of course, I don't think I brought it up here, so let me see if I can find the critical slide that I wanted to review with you. Every once in a while, I think I find a rabbit when I put my hand in the hole. And I think I found a rabbit when I introduced something to you not too many weeks ago, where I looked at the impact of the buckets and the impact of the buckets on market calls. So let me see if I can find that. I think I presented it to my friends here in Singer Island. Here it is. So one of the things that I like to do is I liked every day, frankly, to look at the buckets. And I get an idea in red, in this pie chart, a lot of red is bearish, a lot of green is bullish. But I look at the other side of the chart and I look to see when I get a dominant number of stocks, either above the upper Bollinger Band or below it. And what I found during this bull market, that every time I maxed out on my edge rater, within a couple of days, the market had turned around, usually the next day. So on April 11th, I said, we've hit a low in the market and that will reverse within 3 days. Now, it turns out we reversed on the first trading day. But we've been talking about buckets, and buckets are, I'm just going to get back to the bucket side. We've been talking about, not buckets, but boxes for some time. And boxes are breaking the market down into 9 boxes on stocks that meet criteria of last 2 quarters compared to the same 2 quarters in the prior year, 25 to 50, 50 to 100, or greater than 100% earnings growth. And then annual earnings looking at the last 5 years, and that's key, 5 years, 15 to 25, 25 to 50, and over 50. And we populate this, and each time we've done this, we've seen a market, we've seen these stocks in the boxes far outdo the market. So being that I called a low on April 11th, what I subsequently did is I built, let me see, it's not in this group, all right, yep, here it is, bounce of bottom candidates April 13th, or it should say bounce off the bottom candidates. Let me add that F. So I used HGSI and I created candidates for a bounce play. And it's automated in the program. And I looked at ERG 245 and ERG 255. And in each of these, I have a list of the stocks that made it into each of the boxes. And then, without looking at charts, I basically ran it as if I bought each stock in the box. Now, for those that haven't been paying attention this year, this has been a very strange year. In fact, I'll show you what strange is. I'm going to go into EdgeRater, and let's go into the warehouse report. It's one of my favorite reports, and it's right here called Warehouse Report. And we are going to change settings, and I'm going to find a year-end 2013 file. So I think I gave it to my attendees. So let me look in my Dropbox. So to run this, you need to run it the right way at least, you need to have a database from before the year started, because I don't want to tell you the things that are working the best today are the best things in the market. Oh, it's supposed to be in here. Did somebody take it out of here? Hope not. All right, I've got a few places I could look for it. All right, let me find it in another place. In fact, let me pause this, and I'll go put it in there. 1 second.